I'm going to show you how to pay your $1,000 monthly rent from dividends, but if you pay more than $1,000 in rent, you need to move. That was mean. Wow. Top 2 states for YouTube viewers is New York and California. I'm going to show you how to pay your $2,000 monthly rent from dividends. We're talking monthly dividend stocks to buy today on Let's Talk Money. Hey Bowtie Nation, Joseph Hogue with the Let's Talk Money channel. I want to send a special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Nation, I love dividends. All you out there in the nation know dividends is like a religion for me. There's nothing better than getting paid to invest. But most dividend stocks only send those beautiful checks out once every 3 months, and life doesn't run on a quarterly calendar. From rent to the phone bill and that $7 beer koozie of the month club, you got bills every single month. But imagine what life would be like if you didn't have that stress of constantly having to worry about the bills. If you had an investment that has you covered on that most important bill. That's financial freedom, and that's what we're talking about today. In this video, I'll show you how to use monthly dividend stocks to pay the rent, how to find those best dividend stocks to buy, and reveal the 7 monthly dividend payers that can pay your bills no matter where you live. Stick around, and towards the end of the video, I'll also show you exactly how much to invest to produce that $2,000 a month to pay your rent. In fact, the dividend stocks I'm going to highlight in this video pay an average 9.7% yield. That's more than 6 times the average dividend yield on the stock market, and they've done it while producing a 12% annual return over the last 5 years. And now nation, that last fact is super important, so I want to explain it. Putting this list together, I could have just picked the highest yield monthly dividend stocks. Now that's what a lot of investors do. They see these high yields, like a 15.6% yield on this San Juan Basin Royalty Trust, and they invest all their money before they realize it's lost 42% over the last 5 years, pretty much wiping out everything they collected in dividends. So in these 7 monthly dividend stocks, I'm going to be focusing on those high dividend yields to provide that cash support you need, but also the stocks that are going to add to your portfolio over time. But I also want to get your input on this because there is an argument for those higher yielding stocks, even if it means a declining share price. So what do you think? Would you rather a little lower monthly cash flow on that dividend if it means that the share price increases as well? Or do you want as high a dividend as possible, even if it means a little bit of that capital destruction? Scroll down and let me know in the comments below. Dividends versus price appreciation. The first monthly dividend stock in our portfolio is Horizon Technology Finance Corporation, ticker HRZN, with a 7.9% dividend yield. Horizon is a business development corporation, a BDC in the life sciences and technology space, which means it takes business loans and takes an equity position in those mid-sized companies that aren't big enough to issue their own shares in the stock market. Loans and positions are well diversified across life sciences and tech companies by sector, stage of company, and geographically. Now, one of the most important measures that you want to look for when you're investing in these BDCs is the average yield on their debt portfolio. Now, that's the interest it collects from companies, and you want this to be well above the stock's dividend yield, so you know they can support those monthly payouts. And here, Horizon has a 14.6% average yield on its debt portfolio, well above the 8% dividend, and why the stock has been able to produce a 16% annualized return over the last 5 years. So here you're getting half that return in your cash dividend and half in the higher share price. Next here is one of the most popular monthly dividend funds, the Global X Nasdaq Covered Call ETF, ticker QYLD, with an 11.5% dividend yield. And here I'm going to be using a few of these monthly dividend funds along with the stocks in our list. And first, because there are just very limited numbers of stocks that pay those monthly dividends. There are just 53 stocks traded on the US exchanges with that monthly payout, but hundreds of these funds. Now, including these dividend funds also gives us access to these other investment types and the assets that we wouldn't have otherwise. Also, though, these monthly dividend funds offer the kind of safety that you're never going to find in an individual stock. The funds hold dozens or even hundreds of these stocks and other assets, spreading the risk out and making sure it can put that money in your pocket every single month. The QYLD holds the tech stocks in the NASDAQ 100 index and then sells call options against them to generate that income for its dividends. It's paid out monthly distributions regularly for more than 6 years and has produced a 32% return over the last year. The fund invests in large, stable tech companies like Apple, Microsoft, and Amazon for that upside potential, and then uses the option strategy for the cash flow. We've still got 5 more dividend stocks to highlight, and these are some of the highest yield in the group. But first, I want to personally invite you to join the Daily Bowtie, my free daily market newsletter with all the stock market news, strategies, and the trends that you need to know. It's absolutely free, just something I like to offer for everyone out there in the community. So look for the sign up link in the video description below. Another popular monthly dividend stock here, Prospect Capital Corporation, ticker PSEC, and its 9.1% dividend yield. Prospect is another of those business development corporations. This one founded in 2004 with over 16 years of dividends and performance. The company manages a $5.7 billion portfolio of 122 investments in companies across 39 industries and earns a 9.9% yield on its portfolio. That's more than enough to cover the stock's dividend yield and has helped it produce a 13.3% annual return over the last 5 years. So here's another dividend stock where you're collecting that high dividend yield plus watching your portfolio grow to churn out more dividends in the future. In fact, Prospect has returned a cumulative $18.60 a share in dividends for more than $3.3 billion returned since its 2004 IPO, and that payout just keeps on climbing. That's the purpose of these BDCs, is to act as a bank and investor in these mid-sized companies, manage those assets, and then return 90% of earnings or more as cash flow to investors. Now, all you out there in the nation know, I'm not just about to drop 7 dividend stock picks in your lap and say, good luck. That's not how we work here. We've still got 4 more dividend stocks on the list, and that strategy for exactly how much to invest. But now I want to show you how to look for monthly dividend stocks, what to look for so you don't fall into some of those dividend traps like dividend cuts and a falling stock price. First here, when you're analyzing dividend stocks, you want to pay attention to 3 fundamentals: the payout ratio, the dividend yield, and the total return. The dividend yield is just how much the stock pays out each year divided by the stock price. And this is always shown as an annual percentage, even for stocks that pay these monthly dividends. For example, the Aberdeen Income Credit Fund, ticker ACP, pays out $1.20 per share over a year. So that $1.20 divided by the share price is a 10.3% yield. But now remember, that's on an annual basis. If you own that fund, you're going to get $1.20 divided by 12, or 10 cents a share on a monthly dividend. The payout ratio, or the distribution coverage, is a little harder to find, but also extremely important. Now, this is the amount of income or the cash flow paid out to cover that dividend. For regular stocks, it's that annual dividend divided by the earnings per share. For master limited partnerships, REITs, and business development companies, on the other hand, it's going to be the dividend divided by their distributable cash flow. I know that's a lot of jargon to throw at you, but all these dividend paying stocks are going to disclose that number in their financial statements, or you can find it in most investing platforms. It's important because a company paying out more in dividends than it's earning obviously can't keep doing that forever, and that's when you're going to find problems with these dividend cuts. Now, finally here, before we get back to that list of monthly dividend stocks, is just check the total return on the stock. And please, folks, just look at the stock chart over the last 5 years, or even better, go to Yahoo Finance and click on this historical data tab. Now, you can change the time period here to 5 years and then the frequency to monthly prices, so the table is a little bit shorter. And what you do, you're going to want to follow this column for adjusted close. Now, that's the stock price adjusted by dividends. So we scroll down to the price 5 years ago. We take this current price, $11.56 a share, divided by the $6.43 per share 5 years ago for a total return of price plus dividends of 80%. That's the stock's total return over those 5 years, and it better be more than 5 times the dividend yield, or that means investors have been losing money on the share price. Now, there are other things you can watch for when picking your dividend stocks, but I just wanted to get you started with these 3 key elements, the basics there. I'll leave a link in the video description below to a dividend stocks playlist on the channel that's going to go in depth on everything from those important dividend dates to the dividend yield and everything that you want to know. Next on our list of monthly dividend stocks, the Aberdeen Income Credit Strategies Fund, ticker ACP, and its 10.3% yield. The fund invests roughly $300 million in assets across short-term bonds and loans in companies across US, UK, and Europe, and in those non-investment grade credit ratings. Investments here are spread across the sectors with an overweight in consumer discretionary, financials, and telecom services. Aberdeen leverages that portfolio of bonds to generate that 10% plus dividend yield and has produced a 12.6% annual return over the last 5 years. Now, to be honest, I'm not usually a fan of these closed-end funds because of that leverage and the fees, but Aberdeen is well run and the performance speaks for itself. The Sabian Royalty Trust, ticker SBR, is one we've highlighted on the channel before with its 9.2% dividend yield. Sabian has an oil and gas portfolio that covers over 2 million acres in Florida, Louisiana, Mississippi, New Mexico, Oklahoma, and Texas. Reserves on the assets are estimated to produce at least another 8 to 10 years, and the parent company regularly explores for new assets. Oil prices have rebounded from last year's low, but still trade well below what we saw pre-pandemic, and the shares are 20% off their 2020 peak, which leaves plenty of room for upside. Now, distributions in March and April are 39% higher than the first 2 months of the year as production increases and that crude price stabilizes. So this one could produce a higher yield throughout the year. Next here is Dynex Capital, ticker DX, and its solid 8.5% dividend yield with upside potential. Dynex is a mortgage REIT, which means instead of holding those properties itself, it invests in the mortgages and then makes its money on the difference between those long-term rates and the short-term borrowing costs. Now, most of its loans are in agency, residential, and commercial loans, which are those loans backed by one of the three government agencies. That's Fannie, Freddie, and Ginnie Mae. So these are extremely strong loans for the most part. And now the most important thing you can watch on these mortgage REITs is what's called the net interest spread. Now, this is the difference between what the company is collecting on those loans and what it's paying out on its short-term funding. And the good news here is we saw that spread increase into the second quarter from about 1.5% to 2% mid-year, so better profitability for the company. Now, mortgage REITs also tend to be more volatile than those traditional types of REITs that own the properties themselves, but they also pay out the higher yields too. Shares trade for just under book value at 0.94 times book, which is right around that long-term average of the stock. Now, like some of these other monthly payers, that probably won't be a huge amount of price upside here, but you can count on that 8 or 9% dividend every single month. Another fund here, the High Income Securities Fund, ticker PCF, and its 10.6% dividend yield. The fund invests across BDCs, special purpose acquisition companies, and other income investments, and then uses that closed-end fund leverage to produce those higher income yields. The fund pays nearly all of its earnings out as dividends and has produced a 10% annual return over the last 5 years. So this is one where you're getting that higher cash flow, but maybe a little less price appreciation. In a cash flow portfolio like what we're trying to do here to pay the bills, I like using this mix of some stocks with that higher dividend yield and others that might have lower yields but help you grow that portfolio over time. So you've got this list of monthly dividend stocks and you can add or subtract from this list, but how much do you need to invest to pay your bills? How do you get to that point of financial freedom where the dividends cover your rent? Finding how much you need to invest in a dividend stock or a portfolio for a certain amount of cash flow is actually the easy part. First, you take how much you want to make each month in dividends. So say you want to cover that $2,000 rent on the studio apartment above a bowling alley in Manhattan. Then you take that amount times 12. And since dividend yields on stocks are shown on an annual basis, this makes it easier to calculate by finding how much you're going to need in a year. You then take that number, so $24,000 a year for our example, divide it by the annual dividend yield on your stock or your dividend portfolio. Our monthly dividend portfolio here had an average yield of 9.7%, which is more than 6 times the average yield on the stock market. Take that $24,000 divided by 9.7%, and you need to invest just over $247,000 to have your stocks pay your rent from now until you're renting topsoil instead of an apartment. Okay, I know you're saying, just a minute. You're telling me I need to save almost $250,000 to earn that $24,000 a year in dividends? Well, yeah. You cannot expect to save a couple of grand and for the market to just rain down easy money. Nation, I am not here to blow smoke up your ass and promise you all rainbows and unicorns. But think about this for a second. Now, on a modest 10% annual return and saving just $500 a month, you can save that amount within 15 years. That's less than half the time most people have a job, and saving $1,000 a month gets you there in less than 10 years. Start now, invest regularly, and in less than 10 years, you could be relaxing, not worrying about those bills, and enjoying life. Click on the video to the right for the 7 highest paying dividend stocks, 7 stocks to put the most cash in your pocket. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.